Well, hello again, everyone. Jeff Green again for a market timing market analysis in preparation for fiscal week 9, which starts on the last day of February, February 28th. And after that, we'll be able to say goodbye and good riddance to February. Didn't do real well in February. And as a matter of fact, February historically is usually the third worst month for stocks if you consider the S&P index. So please like and subscribe for these videos if you would like. I'd appreciate that. Let's take a look at the three most common indexes that people watch, and then we'll look at the VTI and take a look at the weekly chart and see what we might expect going forward here. So I hope everybody's staying safe with the global situation and everything else that's going on in the world. So let's take a look at the diamonds on the left, the SPYs in the middle here, and the Qs are on the right. So Thursday and Friday was a pretty positive week for almost all of these indexes. You can see Thursday and Friday, big moves up here. Maybe this is a buy the dip phenomenon. Who will know? Who knows? Time will tell. But some things stand out to me on these charts. First of all, the volume was good. Just about everyone. Although Friday volume on the S&P was not outstanding, and the same way with the Qs. MACD is below zero. We did get sort of a bullish divergence here on the S&P where you got a lower low in prices, but a higher low on the MACD indicator. That's relatively positive, but it doesn't overcome all the negatives elsewhere on the charts. We had the same thing here on the Qs. On this big bounce day, we had a bullish divergence on the MACD. We don't see any bullish divergences on any of the other indicators. The unbalanced volume on every one of these indicators is still dismal and looks like it's heading down. And the DMIs are minuses are still above the DMI pluses. So although this was a good move, I'm not sure that it indicates that we've broken past or broken into a new uptrend. We've still got these downtrend lines above prices. On the Qs, I put two downtrend lines, and that's basically because of the huge volatility that's been exhibited in technical stocks. You can see them right here. So I added this line. Prices are still below this line, and on the Dow, prices are still below this line. So if you look at these indexes, what would I like to see here? Let's erase this stuff. I think that in order to confirm a new uptrend, we got to close above this line and preferably this line. I think this line will provide some difficulty getting over. You can see that on all of these indexes. Another line that stands out to me is the 200-day moving average. That's a big indicator for professionals that below it's bearish, above it's bullish. So we need to get above that line. And of course, we've got this 50-day average moving down that might close what's called a death cross. 50-day crosses the 200 this week. Who knows? Depends on what prices do. With the global situation and the situation in Ukraine seemingly escalating on Sunday, it's difficult to even hazard a bet here. So let's take a look at the broader indexes, the VTI, which is sort of one of my favorites, and we'll look at the weekly also. Let me get rid of this scribble. Okay, so we've got the same sort of situation on here. The broader market, if you look at support lines, important support lines, this one here on the weekly chart goes all the way back to, what is that, beginning of 2021. So that's an important level of support. You can see that on the weekly chart. Let me just draw a line here because this is the level of support I'm talking about. It's the same line that's over here on the daily chart. We created a hammer candlestick on the weekly basis. Now, hammer candlesticks really need confirmation to demonstrate that this is a bottom. This is a very good level, very strong level of support. It just about gives up all the gains from the last 12 months. So if we get a move up, that could confirm that we're going to be in a more bullish mode, but you need to be very aware of that because it needs to end on the week, not the day. We've got MACD heading down, we've got unbalanced volume heading down, we've got advanced declines. That's perking up a little bit, not too much on the NASDAQ advanced decline line. This is the New York Stock Exchange, this is the NASDAQ. And of course, we have no weekly indication on the DMI indicators whatsoever. So again, looking at the broader market on the right, the VTI daily, we've got this overhead downtrending line. We've got the 50 almost crossing the 200, prices below the 200. We did create a small bullish divergence here on the lows. That's good sign, but not sufficient. We don't have a bearish divergence on the on-balance volume or the advanced decline line, and again, DMI minus above the DMI plus. So I think caution is indicated for next week until we can get above here and create some sort of a base at this support and move up. We might just hit this line and come back down to this support. So those are the sorts of things I'm looking for. My recommendation for this coming week is caution. If you're going to take on new positions, I suggest you keep your stops close. Don't put a whole bunch of money in at one time, and let's see how things pan out. So again, I hope everybody stays safe. Hope you have a great week trading, and we'll talk to you next weekend.